2023 saw just 154 companies make their public debut. Well, the slowdown could continue into this year as Crunchbase, its new Q1 Global Venture Capital Funding report found that the first quarter of 2024 saw the second lowest funding since 2018. So joining me now to break down the data is Janae Tier, Senior Data Editor at Crunchbase News. Janae, thank you so much for joining. And talk to me in your words about the findings of this report.
Yeah, I think what's interesting is, recently we interviewed Kaufman Fellows, who surveyed all of their venture investors, and they predicted that 2024 was going to be a better year, that we're going to see more investments in 2024. And our Q1 2024 report does not show that. We show venture investing continues to be incredibly sluggish. We're 8 quarters into this downturn. So 2022 Q1 was incredibly high, and then we saw it come down in the second quarter. So 8 quarters in, we haven't really seen things shift. Venture is down. It was down in 2022 by a third. It was further down in 2023 by a third, and we're still seeing it be lower. It's the second lowest quarter since 2018. So that is indication of how investors are feel. They're not diving into the market at this point.
So let's go back to 2018 and what was happening in the economy then. Are there any parallels that you would see in the first quarter of 2024, perhaps to 2018, that might give us some indication as to why funding was slow?
Yeah. Well, I think what's interesting, if you track, I was looking back, I've been doing this for almost close to a decade, is looking at the venture markets using the Crunchbase data set, and we track all the news. We have founders adding data. And what we saw over the last decade, we really saw venture as an asset class grow. And almost every year, venture grew all the way through to 2021. And then 2021, it just shifted and completely doubled. 2019 was down a little bit year over year, but every other year it was up. And so what we've seen is we're really in this big response to the overvaluations or the amount of money that got invested in 2021. In 2021, all the investors at seed, early stage, late stage invested more. They're all seeing if they invested now, those deals within 9 months to a year would raise even more funding. So if they didn't invest, they'd miss out. So really the climate that we're in is a reaction to the massive amount of money that went in 2021, and then things shutting down at the end of 2021, where M&A was slower, the IPO markets we've seen have gone away. And so the whole climate is still kind of dealing with the excesses of the funding in 2021.
So do you think it's going to take lower rates to get this funding market on the VC world active again?
Yes, I do think, there are some positive signs. Obviously, we've seen a couple of companies go public this year. We saw Astera Labs and we saw Reddit go public. Astera Labs is obviously doing very well. Reddit is sort of holding up on its IPO price. People talk a lot about the fact that they think M&A this year is going to be incredibly strong. So I think there are some improving signs. Some of the stocks that were down a year ago are doing better this year. And so there are some warming signs in the markets, but definitely, where things are not shifting yet. I think if interest rates did come down, I think that would have a big impact. And what's interesting is, those very large, the Magnificent Seven that everyone talks about, those stocks have gone up significantly. The companies kind of below that haven't seen that value uptick. And so possibly if interest rates come down, we're not going to see just all the money going to the Magnificent Seven, because they've had a lot of valuation increase in the last year, and maybe some of those other tech stocks, which are promising, might get a little bit more of a look in.
Interesting. Now, in terms of the investments that we are seeing, or even interest out there, what are you finding is attracting attention? Is it a variety of companies, or is it more in certain sectors?
Yeah, we're seeing, late stage fluctuates a lot. We see very, very large rounds. We don't see consistently, money going into sectors. But I think the sectors that are the hottest is AI is a big sector. That raised 11.4 billion or 17% of venture. I think what's interesting is it's not the largest sector. Healthcare and biotech was the largest sector, and that's consistently through the last two years been one of the leading sectors. We've seen a lot of money, and that's obviously impacted by AI as well. The other spaces where we've seen is really more on the deep tech side. We've seen money go into the semiconductor industry. We've seen investment go into electric vehicles and green energy. So those, I think, have been the sectors that have seen the largest dollars in this quarter and also in the last year or so.
In terms of the IPO pipeline, do you think, based on your knowledge, Janae, that that is maybe being repriced? Certainly the Fed reset expectations in terms of interest rates at the start of the second quarter. And we had heard that, we were expecting IPOs to really kind of pick up. Some of these startups on the sidelines that were finally feeling like the market was strong enough to actually get out of the gate. But given that volatility continues to creep higher in the market, geopolitical tensions are even more a focus, I think is fair to say, right now. How do you think that might impact companies that are private, that are VC funded, that are considering an IPO?
Yeah. From talking to analysts, what I'm hearing is that we expect 2024, there will be some significant companies that do go out in 2024, but there's no push for these companies to go out, and most likely they're going to wait till 2025. A lot of these companies have money on their balance sheets, large revenues, have been tightening their belts and preparing to go public, but I don't think any of them feel they have to rush out to go out to get to enact a financing event. So I think these companies can wait. So I think we will see some companies brave the markets this year, as I say, because valuations are up a bit. Obviously, it's still very scary out there, and so some companies might decide to wait till 2025.
Do they feel confident that 2025 will be a sure thing, given where we are in the cycle?
What I'm hearing is, yes, that companies are preparing. They've had the last 2 years to prepare, and that 2025 is looking to be the year where things take off. Obviously, if there are, lots happening on the geopolitical front, if interest rates don't come down, that might shift. But certainly right now, what I'm hearing is 2025 is when we can expect things to open up a bit.
How does the presidential election, Janae, impact the venture capital space? And what are some of these VCs and even some of these startups preparing for as we get closer to the November election?
I'm not sure, to be honest, how the presidential election is going to affect the private markets. I think the biggest outlook I have on it is that the venture markets are slow. They might pick up a little bit in 2024. But certainly it's going to take the IPO markets or the M&A, really the exit markets, to open up for the venture industries to start investing at a larger pace. And certainly in talking to investors, they see M&A being the sort of largest way in which they're going to get liquidity this year. And then secondly, secondary fundings, where other investors are coming in and buying earlier funds positions in private companies.
Okay. Now, in terms of the IPOs that we have seen this year, Reddit and Astera Labs, how is the VC world, or based on your conversations, how is the landscape responding to those IPOs? Do they feel like they went well, or that they could have gone better?
I think, both of those companies did pretty well. There was a big lift. They priced at their higher range. There was a big lift as they went out. We're seeing Reddit is sort of around above where it went out, but not massively up. Astera Labs, because it is seen to participate, even though it's not an AI semiconductor company, it does participate in data connectivity, and it's seen to benefit from this whole investment in hardware that we're seeing. And so Astera Labs has gone up massively. But I think the challenge for the market is there are not a whole spate of companies going out that you can judge by. These are just 2 data points. Certainly they're not bad, but as you said, it's still a risky market out there.
Janae Tier, Senior Data Editor at Crunchbase News. Janae, thank you so much. It was a great segment.